How's it going, everybody? It's Stas here. So in this video, we're going to be breaking down 3 stocks that I'm looking at right now in the midst of this crazy market that we're living in. And I want to break down some charts, some price targets, support, resistance levels, all that good stuff. So sit back, relax, take a sip of your coffee, go down below, get your 2 stocks from Webull. All you have to do is deposit $100, and we each get 2 stocks valued up to $1,600. And you guys can check out my Patreon if you want all my real-time moves, and all of those are linked right down below. And with that being said, let's get started, guys. And as you all can see, SPY and the markets in general today, they're not making any crazy moves. I guess you can say tech stocks are. The NASDAQ 100's up 0.6%. The S&P's up 0.3%. The Dow's pretty much at break even, and the Russell's down 0.3%. So nothing crazy going on today, but overall, again, tech stocks are doing pretty well, and we will talk about this more in depth in the video later on today. So make sure to subscribe to the channel if you don't want to miss that. And let's get into stock number 1, which is good old Fubo TV, ticker symbol FUBO. And this one's up 20 cents as of now, up about 0.7%. And this one's on the verge of breaking out. If we're looking at this from a technical perspective, right, we've been moving above the downtrend over the past couple of weeks. You guys can see we've been trading above the 50 and the 180 moving averages ever since the middle towards the end of May, and we're seeing a golden cross. We did see a golden cross a couple of weeks ago, more towards the end of May, which really signals more upside to come. It's when the 50s crossing above the 180 SMA, or any smaller moving average crossing above a larger moving average. That's pretty much what a golden cross is. And we clearly took out $25, which was a key support all throughout December, into the new year, all the way up until March. And obviously, when you break a support, it becomes resistance. So we broke out of 25, and now we filled the gap all the way to about $33, $34, which was the high point from the middle of March. And this is where I believe we could break out and see an explosion in Fubo. And let me explain why. Fubo is set to join the broad market Russell 3000 index at the conclusion of 2021 Russell Index's annual reconstitution, effective after the U.S. market opens on June 28th, according to a preliminary list of additions posted on June 4th. And if you guys didn't know, the Russell 3000 index tracks the performance of the 3,000 largest U.S. traded stocks, which collectively account for roughly 98% of all U.S. incorporated equity. So this is a pretty big deal, considering Fubo, it's a newer company, it's newer to the public markets, and now it's being introduced in the next couple of weeks to this 3,000, or the Russell 3000 index. And this index serves as the basis for a broad range of market indexes, such as the large cap Russell 1000 and the small cap Russell 2000 index, hence the Russell 3000 name. You add 1,000 plus 2,000, you got your 3,000, right? So Fubo, in my humble opinion, is setting up for a move on this news, whether it's today, tomorrow, a couple weeks from now, a month, 2 months from now, nobody knows. But for me, guys, I'm going to be putting my alert at $34 per share. And the second I hear that ding, 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 when you get that alert, you know, when ThinkOrSwim notifies you, it's not really a ding, ding, ding. It's kind of like a ding, right? You get that alert, and it breaks above 34. I'm thinking we're going to be off to the races. Probably not back up to $63 where it was back in December, although that's very possible. I'm not saying that's off the table, but I'm thinking what's more realistic is, let's say we break 34 and start to push up towards $40, which was the high from the beginning of 2021, one of the highs, right? That was in the middle of January. Let's say we go to $40, followed by 44, which was the high from the beginning of March. March, these levels, in my opinion, are much more realistic. So stock number 1 is Fubo. We got to watch it. I feel like this is still early in the reversal process, and there could be more upside in store, so watch out for that. And GameStop. GameStop's number 2. This one's sitting up about almost, well, it's about 4.8%, almost 5% up in the green right now, and I think there's breakout potential for GameStop if it's able to take out $230 to about $240, right around this one, or actually no, it's the 50 SMA here on the 4-hour chart. And you may be asking yourself, Stas, isn't that far away? We're only at 210 right now. And the truth is, GameStop, as you all know, could easily cover $10, $20, $30 worth of ground in a single day or two. So yes, it is kind of far, 230, 240, but on the same page, on the flip side, it's really not, because we've seen GameStop rip like crazy in the past. So I have an alert at $215 per share on this particular stock right now. And the reason why I really like it, guys, is we've seen a good almost 2 weeks now of consolidation above $200 per share and above the 180 SMA here on the 4-hour chart at a higher low, and the fact that we're seeing an uptrend. All of these are good signs that GameStop's trying to push back up, but it's not quite there yet, like I said, hence why I have an alert at $215 per share. So I want to see, and another thing worth mentioning here is the 10-day chart. I want to see if this downtrend breaks. Notice how we have been, like I said, consolidating. We've been seeing some choppiness above 200, but we have been moving a bit lower highs, lower lows, very subtly here. So I want to see this 10-day downtrend break above, let's say, 215, 220, and from there is when I'm going to expect that move to 230, 240, and mid 200s, maybe high 200s even, and maybe back to 300s. That's very possible with this stock. So we got to watch it. I feel like anything above 220, 230, it's going to be a breakout play. And another thing worth mentioning is the downside risk, because there is downside risk in all stocks, and especially the meme-oriented stocks, whether it's GameStop, whether it's AMC, BlackBerry, Bed Bath Beyond, whatever you're looking at, there is downside risk, regardless of what all the diamond handlers out there tell you, that whenever you say something iffy about an AMC, a GameStop, all they say is, oh, that's FUD, oh, that's this and that, the third. Regardless of what they say, guys, don't let that get in your head, because the truth is, we live in reality here, and these stocks could collapse. So we have to understand that. And with GameStop, if it collapses under $190, gets down to 100, well, first of all, if it dumps under 190, the downtrend breaks, or the uptrend breaks rather, that's going to be a bad look, because at that point, the next big support level under 190 is 175, followed by 130 to 150. So there could be a good chunk of downside. We're talking 20, 25, 30% if the downtrend, or the uptrend rather, I keep saying downtrend, if the uptrend fails to hold. So watch out for that on GameStop, and always keep in your head, guys, these stocks, especially the meme stocks, regardless of what people say out there, the diamond hand or whatever, they can collapse. And I'm just here telling you all the reality of the fact, or the matter, and I don't care, dislike the video, whatever, it's just the truth, guys, and I'm going to be here spitting the truth. That's all I do on the YouTube channel. And stock number 3, and stay tuned a couple more minutes, because I do have a bonus one at the end of this video. Stock number 3 is Twitter, ticker symbol TWTR, and this one we're also seeing, like Fubo, we're seeing a golden cross. We're moving above the moving averages, and we're well above an old support at about $59. We're now trading almost in the mid-60s. So Twitter, it looks like after a couple of months of downtrend, or downtrending for a couple of months from $81 back in February, all the way down to about $50 in May. So that was about 3 months of just an onslaught on Twitter. Now it looks like it is finally reversing. And by the looks of it, Twitter wants to push up towards the 75 level. Will it get there? I wish I knew, guys, because I would go all in on Twitter. But by the looks of it, it wants to try at least. We'll put it at that. And we are seeing some key supports, or resistance levels rather, coming up. Number one being 68 per share. Followed by, like I said, about 72, 73 per share, mid-70s. So I'm interested in Twitter. And one thing worth noting, downside risk. We are a bit overbought. Our size off the page here on the 4-hour. So watch out for a pull down, maybe to the lower 60s, whether it's 61, 62, $60.50, anywhere in that level. Watch for that to come and watch for buyers to step in. I believe that will happen, and from there, we'll get a better entry point, and I think momentum will continue up to 68, followed by low to mid-70s. So that's Twitter, TWTR, and if you guys stuck till the end, you're going to get the bonus one, which is Plug Power, PLUG, and if you all were in my Patreon this morning, we actually called this out this morning, and we talked about it in terms of their earnings reports, or their earnings report, and now it's up a whopping 10%. So this is doing very well today, despite the fact that their earnings weren't that great. EPS came in at negative 12 cents versus negative 8 cents, so they missed EPS, and revenue came in at $72 million versus $76.87 million, which also missed. So they missed revenue, missed EPS, and lo and behold, the stock is up almost 10%. Looks like the ascending triangle is trying to play out. We held a higher low at 28. Now we're pushing up to the highs from the beginning of June at about $33, $34. And how would this play out if the ascending triangle plays out? Well, it's going to break 34. It's going to squeeze out of there, and who knows where it goes from there, guys. One could only guess. We have 38 as another resistance. We have 48, which is pretty far from where we are now, so let's not get ahead of ourselves. But these are some levels I'm looking at. We have 41, 42. So watch out for Plug, PLUG, and that's it for the video. I hope you all enjoyed it. How long are we in here? About 11 minutes? Yeah, 12 minutes. So yeah, hope you all enjoyed it. Hit the like button, subscribe, drop a comment, let me know your thoughts down below, and make sure to check out my Patreon if you want all my real-time moves, call-outs, morning update videos, more access to me. That's on Patreon. Link down below, or you guys can go to StockSurfS.com/Patreon. That's StockSurfS.com/Patreon. And one more thing, make sure to get your 2 stocks from Webull. They're free. All you have to do is use my link, deposit $100. You get your 2 free stocks up to $1,600. And if you guys don't like Webull, take out the 100, and yeah, you get your 2 stocks for free. And you could also check out M1. You get $30 from them, $10 from Coinbase. All of those are down below. I'll catch you all in the next video. Thanks for tuning in. Again, as always, you guys are awesome. Your support means a lot to me. Catch you all later on. Keep crushing the markets. Stay safe out there, guys. Peace out.